Hi, it's June 15th. We had Fed Day yesterday. Markets are rallying a bit today after a slower start, pre-market session. So let's get to the Longbow dashboard to talk about a few really interesting things that we're seeing. So over here, obviously yesterday, we pointed out that momentum was overbought. It's nearing it again, and we'll take a look at that range in a second. The low end of the range is 134.85, and the high end is 142.46. And then Estee Lauder, there's some information we talk about a little bit in the Longbow Arrows this morning about how the consumer has stayed strong. Retail numbers came out. They're strong. They're not spending everywhere. They are trading down in some places. But Estee Lauder put up some really good numbers, and we'll take a look at that range in a second as well. But just so you know, the low is 175.22, and then on the high end, 193 and change. Then the US dollar, right now it's oversold. So if you're looking, let's check a look there, is obviously it's been on a downward trajectory, a medium term. It's saying bullish from here, but it's been, call it from last fall, on a downward trajectory. But short term, it's just been bouncing around. People are just not sure what to do because in deflationary environments, the dollar usually stays strong. But then it weakens when you're more of a Goldilocks. And obviously, you're looking at the markets today, everyone's partying, think rates are over. But we actually believe that Powell means it. He would have hiked yesterday if he didn't think that it would have killed the banks or caused people to be concerned about regional or smaller banks. But we do expect this summer we're going to see at least one more hike. So be careful on that. So you might see this bouncing around for a little while and see this, call it a bit of strength. Here in 2023 of the dollar. It is not surprising. Again, in deflationary environments, the dollar stays strong. But obviously, and we've written in the notes, we expect a more, not just intermediate term from this signal, but call it several years. We expect the dollar to be in decline, which benefits things like gold, emerging markets. So, get ready for that play. That's not for today because we still seeing this here strengthening. We're at the low end of the range. So most likely you'll see a bounce up this in the short term if you're trying to trade it. And then going back to Estee Lauder, obviously great reports, but guess what people are doing? They're selling. The management team's selling. Let's get this data loaded here. That's never a good sign, right? Never a good sign. When management is taking money off the table, and we mentioned that yesterday too. So a certain tech company who had a ton of buybacks last year and the stock price has doubled. Obviously, when you see management now, taking the foot off the gas for share repurchases, never a good sign. And so, again, when you're seeing it overbought and people taking money off the table, be cautious there. And then momentum. So tech's been up, momentum's up. We're here at the top end of the range. You know what to do. But we caution because here, look, it's neutral short term, neutral medium term. So things are switching around, but there is a premium here on momentum. And so there is some concern. So in terms of pricing in implied volatility in the options market. So this could continue to be strong for a little while until people, get a little bit more complacent. So typically you want to see this as a positive number, a premium when you're buying into something. You don't want to be seeing that when you are now near the top end of a range. And the range there, again, from 142 for the last price, the low end of the range, 135.85 to 142.46. Super close, though, because the closing price yesterday, 141.78. And obviously that's popped up today with people getting excited about rates potentially coming down from the Fed. That's it for today.